We are here in the market to make money. And if that's true, you should not miss this. That is going to be life changing because it's coming from experience. These guys have seen several market cycle in different markets, and what they say you shouldn't do is what we see a lot of people repeating. So let's jump into this and get a taste of it.
That getting out at the bottom and failing to get in, as you say, is the cardinal sin in investing. Which is worse, to buy high or to sell low? If you buy high, you'll have some regret. There'll be a downward fluctuation. You'll kick yourself for a while. But there is this positive underlying trend, which means that the economy will move up over time, and the markets will move up over time. But if you sell at the bottom, fail to get back in, you will miss the recovery, and you miss the long-term trend. And we really have to take advantage of the long-term trend. That's the main job of the investor, not jumping around from one security to another or getting in and getting out. Mm-hmm. The main purpose of the investor should be to enjoy the long-term benefits.
So you and me here in the market, we are stable, thinking, okay, we want to make money. Now the question is, how are you actually going to make money? A lot of people right now think like, okay, this is over, the market is actually going down. If that is the case, then, we need to actually listen to guys like these and what they think. Now, both of these guys have their reputation and they have made their name as big investors. And that's where when you look at these guys and listen to them, the idea which they give you is one of the most important stuff you have to listen to.
Well, again, I own commodities, as you know, and commodities certainly are going to do well because of supply constraints that are developing, and the central banks will print more money eventually because that's all they know to do. When we have the recession, they will panic, they will print more money, and when there's a lot of money printing, the main thing to own are real assets, whether it's...
So things will go wrong. The economy will go down. No one is saying it won't. But the actual question is, when can that happen? Timing, no one knows. But what everyone like this, who has been in the market for 30, 40, 50 years, understand is something crazy because they all are talking about one thing. The last big run. The last rally, which is like the big pop off. And that's something which you really don't want to miss.
At the end of a long bull market. Then things started calming down. We had pessimism, huge pessimism because of inflation and other things. Now it looks like maybe the inflation or the pessimism is breaking, but this will be the last rally, Coach. Just remember, this is probably the last rally.
You referred to it
that we've seen before in this movie. New investors are coming in. They're all saying, oh, I've discovered this new thing called the stock market. It's fun and you can make money and it's easy. And they're bidding up crazy stocks. Crazy stocks are going through the roof. No, all of this has happened before. It's not the first time I've seen this rodeo, and it's happening again. But usually towards the end, stocks go crazy. Remember previous bull market.
So the idea which they are giving you is clear that there's going to be new money coming in and some of the assets are going to go crazy. Now, when you go into the market, you see some things like this and I'm like, brr. Those are crazy fluctuations. You go in the market and you see a lot of assets are moving high compared to others which are in the stable category. They are grinding higher, but they don't have this similar momentum. You see some of these going nuts. Fine. Now, one key stuff you need to understand if you are in the market here, and that's from Howard Marks, is this.
But, in a recent memo, I guess in Selling Out a few months ago, I quoted Bill Miller, one of the great investors of our time, who said it's time, not timing, that produces great results. And I think that's true. Seeing inflows to the account relative to the outflows. What are the aspirations? And importantly, what is the ability to withstand volatility? Now
those two are key factors. Whatever you believe, if you are in crypto market, the volatility is super high, whether you agree or not. Right now we are at resistance. If we break higher, that's going to bring more momentum. Now, to the upside, the momentum is actually great, fine. But two key stuff which he gave you is one time in the market, not trying to time the market. One time in the market, great. But even if you have time, you're ready to wait 2 years, 3 years, 4 years, whatever. Then the next point he told you is like ability to withstand volatility. Now imagine if that volatility to the upside, it's all good, great, fine. Your portfolio is ballooning. Who worries about that? So the volatility which they are talking here is also to the downside. You enter into something and the price drops. But the long-term trend remains the same and the short-term volatility is going in. And a lot of people will take that opportunity to buy the dip. Fine. That's what they are pointing out here. So if you are here in the crypto market and when you look at all this, don't go crazy. Don't go just move around in a lot of different assets, because that's something you really don't want to do. Inside markets, you need to understand there is one thing which I strongly believe is going to happen. And it's not only me saying that. That's another thing. When you go listen to Jim Rogers in this particular episode, say here when you come to 6 minutes, 30 seconds, what he is giving is something related to crypto. When people ask, especially, they are asking about crypto and his opinion, he is negative on crypto, but listen carefully. What is his thought process?
Well, my view on cryptos, you said I don't believe in it. It's not a question of belief. My analysis is that if they become successful as money, governments will react. Governments do not want to lose their monopoly, and governments will do something. The American government and every government is working on crypto money. But when money is on the computer, the American government is not going to say, okay, this is your money now. But if you want to use that money, you can. That's not the way governments think. That's not the way bureaucrats think. They want control and they want to know everything.
I completely agree with what he has stated. But that does not actually mean crypto is going away. That's what you have to understand. When governments are going to come out with their central bank digital currencies, which you can see a lot of them are working on this. And if you look at this one, which is the light green, you can actually see some of them are already launched it and some of them are at the pilot area. So that does mean around 20, close to 20 central banks are moving on with this. And a little bit of them are we don't need this, we're canceling it. Others, a lot of them, around 60, are still researching, but you see some of them are actively working on coming out with this. So you still have around 40 of them, and I definitely believe this is going to be major players. So that's going to be Euro, Yuan, dollar, INR, you name it, all of them are going to be there. So what does this actually mean when you go back to what Jim was giving you? Governments want control. I agree that perspective. Yeah, I agree. There is no defense. If they actually going to go on to the exchanges saying you can't operate. Now, okay, you have the decentralized exchanges. You can use that. But, if your grocery, if any store is not accepting that, now there is no use. Now, it can be a store of value. You can put it there. The price fluctuates. Great. But you cannot use it or withdraw it to a bank. That's where the issue comes in. Fine. But when it is something like XRP, where they say, okay, that's a bridge asset, it's not a crypto asset designed for the retail guys, this is a wholesale asset dealing with payments, and especially when central banks are there, this is what you are really looking at. For me, if you are in the market and you are looking at all of these stuff, this is it's so easy for anyone in the market to understand okay, this is coming in, but how long it will take, no one knows because the governments are so slow. You pay a lot of tax money, but they are slow. Whether you agree or not, they will take a lot of time. And in the meantime, you are going to see the market cycle play out. And especially this month, there's a lot of stuff happening. That's a lot of stuff happening. You're going to get the CPI data. You're going to see how it merger actually goes on. Then, you're going to see the 21st, the rate hike decision. You have Cardano's or Vassal hard fork. All of that actually coming in. And you see something like this. Whether it's true or not, I'm not sure. But as I saw and I was reading through it, and I'm like, if that's true, so it's interesting to read through this and understand like, okay, there are people who are actually going to try do this stuff. And if you are in the market and you don't see this happening, you are leveraged, that's done. So now one of the highlights which I was looking at, the Watcher Guru, is like 20,000 blocks left to be mined, and then they merge to proof of stake. So as they are trying to get some piece of the payments market, you actually understand like how important that market is. When all of these central banks are working on it, on at least 20 big guys, if they go on, money is going to go that direction. You will definitely see in 3 to 5 years how yuan changes because they have their central bank digital currency. Now, when you come back to the market and ask like, okay, fine, I get the general perspective, but how do you actually think about investing in a short term, like, whether I should enter, exit? Now that's completely up to you, because whether you be offensive or defensive is completely up to you. But if you actually listen clearly to Howard Marks here in this episode, he's actually giving whether you should be offensive, whether you should be defensive. When you actually go here, say from 8, he's actually talking about inflation. Then as you come to 8 minutes 40 seconds, that's where he actually talks about whether you should be offensive or defensive.
Today is just that it's really hard to get timing right. And if you turn more defensive, at some point in time you're going to have to turn aggressive again to participate in the normal progression of markets. And it's much more important to be in than out.
Yeah, I know, as you said in one.
So when I listen to guys like this who have proven track record, and then listen to other people saying, okay, we'll jump out now and we'll wait for a bottom and then come back in, I'm like, that does not work like that. So the statement here is clear. It's important to be in than being out of the market. So yes, you can go aggressive or defensive. So buying and going super aggressive at the top, being super leveraged, no one is talking about that. Then comes the tsunami of kickouts. The market will shake you out. But if you're not leveraged, as he explained before, you will still become profitable. Now, the profit margin would be comparatively lesser than your counterpart who entered at the midpoint of the market or earlier in the cycle. Great. But when the market drops, that's your opportunity to average down. So if you are that one human being, okay, now you have opportunity. Fine. Or in general, if you are looking at the market like, okay, is the optimism still there? Can the market still go higher? And I personally think like the market is actually going to drop. If that's your argument or that's your question, let's actually listen to what Jim Rogers actually think about the market, whether we are going to have that optimism or we are still scared of something worse happening.
You last time, there's has been a lot of pessimism around, and usually when there's a lot of pessimism, something comes along to make people optimistic again. That seems to have happened. People think the central banks are going to calm down now. We have optimism, so we're probably going to have a rally for a while.
Now, we've talked about this even before, right? Now, not like Jim Rogers in that detail, but we also had our own thought process saying, okay, yeah, dollar is going to slow down a little bit for the short term, and the markets are going to go for another rally, and especially for altcoin market, that's going to be the wave 2. Now, with a big rally coming in, we all know that that rally is going to end at one point and you're going to go down 70, 80, 90% in different assets. Fine, that's what he's talking when he says, okay, after that, it's going to be a massive downside. Now in crypto, 80, 90% is regular downside. We see that often. One of the other stuff you have to keep in mind is when we go back here and break this, that's when you are going to observe a lot of action in the market. So if you are here and you're looking at different stuff, you go to XRP, which, we are all in. And I won't say like, go 100% in for an asset if you're an investor. Now, if you have time to digest this volatility with the SEC case, that's a different story. But if you don't, now that's going to be really hard. Because yes, the market is giving you an opportunity. You are great. You are seizing that opportunity and you have time. It's all good. It's all great. But if you are short on time, now you need to look at different assets inside this. Now, I'm not talking about highly correlated assets. If it's XRP, which you have, then you're going to XLM, that's highly correlated. Say you look at HBAR, that's all payment assets. So you need to look at it clearly, as we explained in one of our videos previously. If you are investing, you should be investing based on your risk tolerance and your time frame. So having different areas like in the smart contracts, payments, and other category usually helps a lot. So now, if you're in the market and you're trying to, time it, okay, it's okay to try and get trades thing, right? But if you don't have time to put inside that trade, that's going to be hard. Because imagine you try to time the market and you thought it's going to be the bottom and you're entering here. And in between comes the bad news, the price comes back and then bounces. So it's just another 2 or 3 weeks added into that trade. So if you have patience, you still move out with 40, 50, 100% of profit. So once you understand the stuff, and then you're like, okay, fine, I kind of get that idea. But what is the general narrative for most of the assets? This is what I actually see. Like you had this breakout, you tested this and you went up, but at point where you actually reached the previous level of resistance here, where you got rejected last time, it happens to be a big resistance here. The price is coming back down. Now what we want to see is that the price come here, you retest this and you start grinding back higher. That's the positive note. Now that's on a daily chart for XRP BTC and you still look like, okay, it is consolidating. It's not doing much. So to get a bit more clarity, you can go on to Ether BTC pair. And that's where I'm like, okay, we had a fake out last time. So are we actually going to do another fake out here or are we trying to grind higher? So that question is still there with 3-day chart of this one showing you like, okay, there is a possibility that this, which actually made a higher high. Okay, let me pull this down. Fine, this actually made a higher high here and at the same time you see the RSI putting in a lower high. So it's like, okay, some kind of slowdown is coming here, which actually suggests like, okay, the Bitcoin dominance may try to go back up. And we are here in the Bitcoin dominance looking at this. Yes, we broke below. Right now, it's actually retesting this range. So if we don't go break this above, yes, we may actually go down. But what we are looking at right now is the RSI. Will it actually get rejected? If it does, I believe that we are going to come back lower. So what you can look at as a rule of thumb is, okay, clear all this, look at the moving average. If the moving average is being tested and getting rejected, you're going lower. You see this? You go to the moving average, you slow down and you break higher. If that happens, you're going to come back inside this trade at range and both Bitcoin and altcoin is going to move up. But then market is going to be completely tied up with Bitcoin moves. If not, Bitcoin would be slow. It's consolidating and you see a lot of altcoins gaining volume and traction. The investors move into that direction. The actual volume in the market tend to go to that direction. Right now, the volume in Bitcoin is slowing down. The volume in Ether is slowing down and you see a lot of volume being gathered around stable coins like Tether, like USD coin, like Binance. So when you actually see these coins getting more volume, that is like people are waiting to actually enter back into the market. So now you can actually go look at any different asset inside the large caps to actually see like what you can expect. And for the time being, I'm like, okay, this does actually show you like, okay, this is your resistance. You had a fake out here. You broke higher, but you had a fake out. Still, you came back here, retested the moving average and bounced. So keep that in mind. When the trend is your friend, that's when you actually make money. Now, that's not me saying that. That's big guys in the market saying that. Great. If you couldn't time it perfectly, great. Try to see what is the long-term trend. So just look at the bottoms here and try to connect these. So this is how the market is actually going. Fine. So last time, from that median or the average, you actually went like 70x. That's all good. That's all great. Then you went up 20x. So if you believe next time it's going to be like 20x, 15x, whatever, it's still going to be big in terms of numbers. And from here, if you are entering at current range, that's a 30x. And most of people who I know entered Cardano's like through the bear market, and their average is super low. So if it's that one guy who has a bit of XRP, Cardano, and all in that range, you are going to see massive fluctuations. Same, you go back to the XRP, right? Now, the only issue with XRP is that the case is still running and you're inside this corrective pattern, and a lot of people will have a hard time understanding that the adoption is massive and the use case is big. So this is your general trend line. So you are going to fluctuate around this trend line, up and down. But this one is considering we have moved close to this here. But if you actually consider the long-term narrative, what you would be looking at is something like this. Because you actually came in, now we'll go into this chart clearly to actually see like, okay, this is what you're looking at. You had the support, then you broke below, you retested that. Fine, then you broke higher, retested that and bounced. Fine. Here, when you reach that range, you slowed down, you bounced, then you broke lower, then you came back up, testing it and slowing down. Now, the slowdown did not actually come to the bottom here. You're still holding this point, which is the support. So when you bounce next time, yes, price is going to slow down a bit near the resistance. That would be like $7, $8 range. But then if you break this one, now next time when you go up, that's going to be massive. To the downside, what you are looking at is 90% to the downside. When it drops, great. Last time, if you measure that, yeah, close, 85%. But when it is going to the upside of the trend line, it's like 40x. So if you are saying like, okay, from here it can break higher and I think it's going to be half of that, 20x, it's big number. $100, $150. That's undigestible for a lot of human beings. Great. So if you imagine it's going to even come towards $10, $8, $10 range, that still is a huge play from where we are right now. So if you say like, okay, I'm not looking at the top, I'm looking at this range, you can still make 30x. That's what I told when I'm comparing Cardano with the XRP in the same market. So if this is your trend line, which you are looking at, as we all know, yeah, the market actually trends higher like this. And where you are making money is based on this. The market goes up, down, up, down. So if you bought in here last time, yes, you have to go through this volatility. But at this point, you start being profitable. And if you have more patience, you can try to get somewhere here. Now, if you are lucky, you'll get the exact top, but most of us don't usually get that. So you have one chance to get out here or another chance to get out here. Now that's, most likely you're going to take that because the next one is going to be a big rally and you don't really want to miss that. Even if you miss that and come back down, yes, your profits are going to be vanishing, but you're not in a heavy loss like you are here. Now that's a miss, but I think the message is actually conveyed. So guys, if you received value for your time and learned something new from this video, please do hit that like and subscribe button if you haven't done that already. And if you want these kind of updates for a lot of different assets in the market, where the market is going crazy, it shows a lot of confusion, and you want to see whether that asset is a buy or wait or stay away, you can definitely look at the Patreon. The link is given in the description below. So that's it for today, guys. I'll meet you on the next video. Bye-bye.